Okay, thank you. So my objectives is for us to appreciate the difference between IPSAS and IFRS and the challenges encountered in adapting accounting standards. And I want to close off by looking at GOJ path to accrual accounting. So why accounting standards? That's the first question we ask. So accountants and other financial practitioners need a financial framework to prepare and present financial information that is, one, transparent and acceptable by all stakeholders, such as the bank, governmental authorities, when you think about they collecting their tax, and potential investors who want to invest in companies. And so the International Financial Accounting Committee have mandated standard setters to develop and promulgate accounting standards to guide these practitioners. And so these standards should facilitate transparency and promote what we call accountabilities. And so some of the standards that we'll see that is practiced in the industry are across the world. Like, for example, the US use the US GAAPs, United Kingdom use the financial reporting standards, and everybody else, in some cases, Europe and international world use the International Financial Reporting Standard, IFRS. In the past year, we have seen where they have developed standards for SMEs because they may not reach up or meet up to the requirements that is in IFRS. So they have prepared standard for SMEs. And then the standard bodies look at public bodies and said, hey, we need some standard for public bodies. And so the international public sector accounting standards were developed and put to different countries for adoption. You know, I share with you in terms of government accepting or implementing standards, that this process can be very long. I recall someone said, in England, UK, they started that process in the 70s. In the 70s, they started the process of going accrual accounting, moving away from government accounting. And they never implement or roll out implementation until the year 2000. The financial year 1999-2000 was the first time they implement accounting standard, and it wasn't for the whole of government. That never happened till later on, like some 6 years on, where now you have whole of government doing accrual accounting. And so the benefits, you know, I would say from implementing or adopting accounting standard is that it fosters transparency, and it fosters or promote public trust. So the standard setter will now look on and person look on and said, when you have accounting standards, when you prepare your financial statements, you give a complete set of financial statements. It shows everything. Everything is there. Your assets are there. Your liabilities are there. Your income, your expense, and accrual accounting shows you everything, meaning unpaid bills. Unlike a cash accounting, as the gentleman have reported earlier, where cash accounting only record what happened. What happened now? The money spent now, the money received now. And it's just like your mother give you $100 to go to school. $1,000 to go to school. And you go to school with that $1,000, you pay your bus fare, you buy a lunch. Some of us getting $2,000, don't it? You buy lunch, and you spend all that money for that day. Tomorrow morning, you're expecting to get another $2,000. And so that is how cash accounting works. You get the money, you utilize that money now and then, it's done, it's dusted. And so for government, what you find in government, that they put out a budget every year. April 1, they roll out $800 billion. That's a lot of money. 800 billions or sometimes 900 billions split between recurrent and capital. And they spend it all in that year. Next year, April, they come again, they roll out another $100 billion. So all the expense are recorded now, and they collect the tax, they get full loans to fund it, or grant funding, the many ways in which they get funds. So they record the money, they move on. So accounting standard help to streamline it, especially accrual accounting, where you capture everything. At the end of the financial year, you capture unpaid bills and bills that would have been paid. So that's it, one of the benefits. And so when we considered, I should share this. Why did I never tell myself to put up the PowerPoint? Just a sec. Let me share, sorry. And so when we consider the difference between accrual and IPSAS, IPSAS accounting standard look at government entities, while IFRS is for private companies. So the hope is that as much as possible, IPSAS will be eventually converge to IFRS. It is to ensure that financial reporting generated by private and the public sector are comparable in terms of accounting for similar types of transactions. So there are differences between the two standards, since IFRS are developed for profit-oriented entities, while IPSAS are geared towards public sector entities and those that provide public services. So there are a number of differences. From my research seminar, the difference between IFRS and IPSAS is over 180 differences. Wow. So if you prepare yourself, like many of us who study to become a chartered accountant, or study at university, what we would have prepared ourselves with is IFRS, knowing those standards. And then you come to public sector, you want to become a public accountant, or you want to work in the public sector. What you learn in school, how you recognize assets, how you recognize liabilities, and how you measure it, and what you should recognize. It is not so when you come to the government. First, we say they may do it on a cash basis, and you are saying, hey, I want to see a fixed assets registered or the assets depreciated. It's not so. It's not so in central government. You may find it in some executive agency and statutory bodies. And if you should go to the parish council, that is another kettle of fish. That's another headache. And so some of the differences that have been reported on from an assets perspective, under IPSAS, they recognize what we call heritage assets, specific assets, monuments and different joins and such. So IFRS does not consider heritage assets because you don't expect like a private company to have heritage assets or own a museum, etc. It's mostly government entities that own those things. There is also budget versus actual performance. This is something that government practice. So for example, the appropriation bill, the money issue, and what we call appropriation accounts, where at the beginning of April, the budget is tabled. By the 31st of the other year, when that cycle run off, 2021, the entities prepare their appropriation account, showing how they have spent the money. Was the money spent in accordance with the appropriation bill in accordance with what the Parliament approved the year before. So they prepare their appropriation account, and that is a big thing. Whether or not they overspend on some budget that they may get licked by the parliamentarians. Why did you overspend on the appropriation bill without the proper approval? And the Auditor General love that, when they look at it and see people spend money and it wasn't approved. It's a big lick. Bam, it made the newspaper. Ministry of Health overspent on COVID and it wasn't approved by the Parliament. $1 billion. Headline in the newspaper, person start to ask the question, why is that so? So in IPSAS, it speaks to budgets versus actual performance. That is not applicable in the IFRS. IFRS don't care whether or not management overspend on the bill. And so under IPSAS, there is a standard for IPSAS 24 that speaks to it. There is also disclosure requirement for general government sectors. That's not so in under IPSAS. Income tax is another standard that you don't see it under IPSAS, but IFRS require it. And so there is a standard named IAS 12. Anyone know the standard? That speaks to income tax. Consolidation is something that IPSAS really have not moved ahead with, because it's still consolidating accounts and the whole format. IAS 27, we speak to subsidiary accounts. 28, which speaks to giant associates, and 31, I speak to joint venture. IFRS have passed that stage a long time by issuing new standards. As from 2007, they have issued standards like IFRS 10, IFRS 11, and IFRS 13 that supersede IAS 27, 28, and 31. And so though IFRS, though IPSAS have these standards, they have not moved ahead to revise the standard so that it be in line with IFRS 10, 11, and 13. Another consideration is impairment of non-cash generating assets. IFRS 21 caters specifically for impairment consideration for non-cash assets. However, IFRS assumes that all assets will be cash generating. So there is nothing in IFRS that said there is non-cash generating assets. All assets are cash generating. And so when you look at IFRS in this standard, there is the IAS 38 impairment that's looking at business combinations, you have intangible assets and those things. And then the final one, and as I said, there are over 180, but these are the significant ones that I want to highlight. The elimination of private sector specific concepts. And so IFRS, IPSAS, and exclude guidance that are private sector specific. While IFRS provides principles for certain economic phenomena that are irrelevant to the operation of public sector entities, such as accounting for share-based payment and earnings per share. Any question? All understand? Can I close up and go? Or you want me to continue?
Sir, continue.
Thank you. And so here I highlight some standards that are covered by IPSAS and those that is covered by IPSAS in IPSAS, but they are not in IFRS, and those that are in IFRS that are not in IPSAS. So IPSAS 22, disclosure of financial information for GGS, which is consolidated accounts. IPSAS 23, revenue from non-revenue transactions, and non-revenue transactions are taxes, transfers, and gifts, bequests. Those are things that government entity will get grant from international body. There's a standard to say how you should account for it and how it should be recorded. And then there's the IPSAS 24, which I mentioned earlier, that speaks to budget. And what it is saying here in terms of the budget, once a budget has been tabled and approved for public use, like the appropriation bill, IPSAS 24 is saying that you should include it in the financial statements. It's supposed to form a statement in the financial statement that when the public, the taxpayer, take up that financial statement, they can now look at it and say, okay, this is what was approved, this is what was spent. And if you overspend, an explanation is provided for it. And then there's the IPSAS cash basis, which is included in the IPSAS, but IFRS don't have anything but cash IPSAS, a cash accounting standard. And you can see the reason for it, because what you find is that government system is complex and they currently operating from a cash basis. I was speaking with someone today in terms of government accounting, and the person said, government not even operate on a cash basis. I found it strange. And if you're an accountant, chartered accountant, there are two bases of preparing financial accounts. Either you spend the money now, or you delay in spending the money until tomorrow. So when he said it, I was taken aback. And what he's basically saying that cash accounting and how the appropriation bill is presented, or the appropriation account, is that you have the budget and you compare the budget with the actual spend, and then there's a line to say variance. The accounting student would have known that has been management accounting, that you have budget, you compare actual with budget, and you minus and you get the variance, and you need explanation for the variance. That is what happening in central government, is that they table the budget, approve, write into law, because it is a law, it's not a legal document. People can go to prison if they not spend the money correctly or spend it according to how it was enacted by the parliament and signed into law by the governor general. And then the auditor come in and audit it. So you have the appropriation bill, the first arm for public management. Then you have the auditor general, the second arm, who now review it. And then you have the PAC, who now say, the Public Accountancy Committee, who now take the auditor general report and said, but why did you overspend on this budget money? Why didn't we not receive values from money from the spend? And start to make nice. If you were looking in the paper on Sunday, it said the former chairman for Petroleum Corporation of Jamaica, PCJ, was summoned to court for incorrectly claiming a fraudulent, claiming to travel overseas when he never traveled. And so you have those instruments in government to hold public sector accountable. And so it's prepared in accordance with that. When you look at IFRS have a number of standards, like, IFRS 2 share base, IFRS 3 public combinations, IFRS 4, 5, 6, 13, and I mentioned 10, 11, 12. And there are other standards that have been issued in the past 2 years. You have 14, you have 15, you have 16, which I look at, impairment, fair value adjustment, and those things. And income tax 12, share earnings per share standard 33, and interim financial reporting. These standards are there in the IFRS, but they are not there in IPSAS. IPSAS has not reached there yet. The standard body has not reached there to now look at these standards and incorporate these standards in IPSAS as a set of standards. So, so we look at the standards, we look at the differences. And so whenever a country or a company decided to move away from a practice, you change, adapting a new accounting framework. And so the accounting framework for government is a framework that Mr. Johnson and Demar have looked at, Dunbar have looked at earlier, where it is guided by the FAA Act. And that is the framework. That's the framework that, government operated in. And so to move away from that framework require that it's going to be a tedious process. And we see it for companies. When companies move, when there was a conversion from generally accepted accounting practices to now IFRS, it's an expensive engagement. And so the adoption of an accounting framework is one of the most tedious processes that requires significant investment and commitment. Management have to commit to it. And the following require the following. You have to engage a subject matter expert. So for example, you were once carrying some shares and your books. And so you would have purchased the share at $1 million, and you have it on your book at $1 million, meaning you're carrying it at cost. However, if you should adopt IFRS is not going to say to you, you need to carry that share at fair value. And we understand what fair value is, don't it? Yeah? Do we? Are we all asleep here? Okay. We need to carry it at fair value, which means that you are carrying it at market price. You now have to go develop some new tools and redesign your entire process to now value that share. And all the standards don't look at it because the standard said you're in recognizing an asset, it is carried at, it must arise from a past experience, yes? And economic benefits must flow to the entity. So, but we recognize standard and liability in the past, before you have like a IFRS 9, which is a headache. You have to engage, you have probably go hire someone who's probably going to charge you $5 million for you to know value that share or those shares and put it on your financial statement. Requires you're no longer looking at it from past experience, but the standard setters are now saying under IFRS, let's look at it from a future perspective. What is the expected loss that may flow to the entity? What is the cash risk, the registry, the financial risk, the business risk, the sector risk? All of those things you have to put into equation. You have to engage an expert to now value your share, to present it on the financial statement. It's a tedious, it's an expensive process. You now see a reclassification and recognition of assets and liabilities. Just like government, they do record assets. And I say, like for example, the parish council or the government developed road, that is not on any books as an asset. Or the government feel like, remember that $900 and something million them spent to build 1 kilo road down up Clarendon? That is not recorded anywhere. Or couple bridge that them built for Cassia Park Bridge, or highway that they would have built, what happened over Mandela. It is not recorded anywhere. Then they spend the money and that's it. And you would consider that to be an asset. So if government decide to go accrual account, now they have to value those assets, roads, build, and bring it onto the books. A tedious exercise. You have to now consider you now need an accounting software to now synchronize with all of government. And I say to you, conference, there are so many rules in government. As I've said earlier, there's rule for the cent that you spend, 1 cent. There's a rule, there's a guidelines for it, how it's supposed to be spent. You now have to go find a software where you can integrate all of those rules so you can report on it. It is a tedious exercise. Training of accounting staff also. Because one experience, even me, and I will share later on, is that a lot of persons who are preparing accounting reports do not have the skill sets of how to do it. Friends, this exercise can take months or even years to fully comply with the standard. Moving from one framework to another can take months, years. I shared with you earlier that it took England more than 30 years before they could have implemented the standards. And so, what is the current state of Georgia accounting standard? The operation of Georgia accounting function is complex, which makes it difficult to comply with IPSAS standard or to adapt IPSAS in its process. The following barriers the implementator have experienced in the past: one, there have been inadequate accounting packages that were not designed with accounting modules. So this person I spoke with in my research said that they have designed some modules that just expenditure based, not assets, recording assets or recording your liabilities, expenditure based. Budget, some of them is just the budget, appropriation bill upload, and the expense spend. The money spent and that's it, and they record it, that's it. There have been lack of adequate human resources with the professional qualification. So government really not attract professional accountants who are chartered and etc. And an attractive compensation package. Person getting, I share with you. A CFO in the private sector, probably taking home, I'm going to use one of those big bank, NCB, probably taking out $1.3 to $2 million per month. The accountant general, who is in the same role, probably taking $400,000 or less to perform basically the same role, because the accountant general have to manage and disburse $800 billion every year, if not more. And that's just for central government, putting the public bodies as a part of it, are the taxes and things that are large every year. The numerous laws and guidelines requirements, the political will by the parliamentarians, unrecorded assets and liabilities and accounting function is not centralized. So these are some of this is the current state of government accounting. So the part have been a rocky part to accrual accounting, a rocky part for the government to convert from cash base or from whatever base they are doing, whatever method they are using to prepare their accounts, the Appropriation Act basis or the FA Act basis, whatever. And they started this process in 2002. And 19 years on, they are still on their knees, creeping. It has been a sluggish operation. I remember when in 2012, after 10 years of trying to implement it, they abandoned the process and engaged another consultant. After 10 years of getting consultants doing the thing, review, looking at government system, training people. They abandoned the process and said they are starting over again. It's 9 years now, it's probably another 10 years. And they are still at the early stage of implementation. I'm saying to you, the process is long and tedious. However, notwithstanding, some entities have adopted accrual accounting, while others are either cash, modify accruals, and accrual. And I give you a list here when you consider what is happening. So you have central government, ministries and departments. Their reporting framework is appropriation bill. I say call it management accounting. There's cash-based accounting that they have been trying to implement, and every financial year, every 1st of April, we are going to implement cash-based accounting. And this has been going on from 2012. We have the municipal corporations, and there are about 13 of them that do modify accrual basis. Again, in 2016, they passed their Financial Reporting Act to mandating them that the basis on which they are supposed to prepare their accounts is on an accrual basis using IPSAS. That was 2016. The experience that I have experienced, them not even know how to do bookkeeping. And so you will see they have not submitted any financial statement for audit because they can't even prepare a set of financial statements. That include balance sheet, income statement, cash flow statement, changes in equity, and the explanatory notes. They not even can do that because they don't have the competence. I don't have the competent person there. Then you have the executive bodies, and there are about 12 executive bodies and statutory bodies over 300. Don't quote me on the number in terms of the statutory bodies. They are doing accrual accounting. They have moved ahead. Then you have government companies, those that are registered with Companies Office of Jamaica. They prepare their financial statement using IFRS. Companies such as NHT, NIF, their financial statements are prepared. PCJ, that is Petroleum Corporation of Jamaica, they use IFRS to prepare their financial statement. So cash flow account, cash based to accrual based, and so the guidance that was provided in the transition, the author stated that the style and speed of transition may vary greatly between entities, and so a wide range of approaches is possible. So what you may find when you read the literature on it is that typically they give an entity 3 years to make that transition to accrual accounting. Once you start the process, you have to carry it through. And so before considering alternative transition paths, it is necessary to have a clear understanding of the gap between the current system of financial reporting and the desired system of financial reporting, whether it be full accrual, IPSAS, or the cash base. And so entities tend to start, like after the government have said, oh, we're going accrual accounting, between 2002 to 2012, accrual accounting, they are championing them, they put on seminars, they put on workshops, training session. Consultants from all over the world, them send people foreign to go get training. There we are going to roll it out. In 2012, 10 years after, they discovered that they were doing it the wrong way. Man, how could you? You employ consultants, you develop system, accounting systems, rewrite system, abandon system, write some new system, put up chart of account. Oh, we were doing it the wrong way. Oh, we have to start over the process. That is government for us. So moving cash flow accrual accounting, the first thing you want to do is to, and in anything, when you leave UTech conference and you want to set up your own private, which is something I encourage, entrepreneurship. Do your own thing, be your own boss. And you set up your own system. The first thing you do when you set up a business is to design a chart of account. And so that's the first thing you find when you're moving into accounting. You want to have a well-defined chart of account. What the literature said is that you can go cash-based, or you can do a comprehensive that about cash and accrual. But you just start your business, so you just record what you have. Eventually, you will become a full-fledged accrual accounting. And so over the years, GOJ have modified chart of accounts many times. This financial year, they put out a chart of accounts, and next financial year, there's another chart. Because it's an evolving thing as you are defining your process. And when I design chart of accounts for some of my clients, it's a detailed process. You have to sit down and document. You have to sit with them and ask them, what business are you in? What are your expectations? How do you want to classify certain things? So you have to sit down and design it out, map it out, and such. The next thing that World Bank have recommended is that you take a treasury reference module approach. You adjust your treasury system first. You adjust where you are getting your money first. And so for me, as a practicing accountant, and someone call on me to say, hey, I want you to prepare a set of financial statement. For me, I may say, give me your bank, send me your bank statements. Let me see what is happening with the business. And so when a client may send you, or a potential client, send you their bank statement, you see everything in an accountant suite. Conference, you see everything. You see where they must spend their money, whether they must spend it in the business or they must take trip to Dubai. And so as an accountant, you request the treasury management. So World Bank in 2001 said, the first thing you need to do is to fix up your treasury management, cash management, fix up cash management. Know where all your money is and where all your money is going. Between 2000 and 2012, the government operate in silos. You have these entities have millions of dollars, cash rich, but government is poor. And so when we look at the process under the IMF agreement, is that they said, let's strengthen the treasury management. Are the MDAs and ministries that have money out there, we are going to close those bank accounts. And we are going to have the money in one place. We are going to have one big bank account. You know, some of us like to have whole heap of bank account. Yes. Have bank account with all the banks. I think I have a number of accounts with most of the banks. Yeah. And that treasury management, you put the money in one place. So what the government have done in 2014, they close out all MDAs bank accounts and carry the money and create and lodge it to to accountant general by adopting the central treasury management system, CTMS. And so out of CTMS, our money is paid. Our civil servants, our suppliers are paid from one system. You know where the money is coming from. You know whether you have money to pay JPS, whether you have money to service the loan, you don't have to worry that you're going to borrow money to go pay JPS. And you have Petroleum Corporation and Jamaica have millions of dollars sitting down on. The government said bring everything into one coffer. And so this system is to ensure that all monies collected by government is large and therefore improve the cash management system of government. This would have allowed government to better manage its cash and prevent some entities from keeping large cash reserve while central government continue to borrow to finance it. So the standard provide the guidance. Design a chart of account, have one system where all your monies are lodging. So government follow through on that exercise. The next thing in the process is to automate your system. Now you no longer can should you maintain your accounts in Excel. I saw some big ledger book, those books that you write up in class, where general journal or cash book and it's manual. The system must now be automated. So next, after you have treasury management, you have your central management system. You have your chart of account. You have to automate it. And so a comprehensive accounting software to capture all transactions for all of government. And so government over time have moved from what they call ARP to General Financial Information System. Over the past 19 years, we have seen where government changed their system almost 4 times, from ARP to FMIS to what them call FinMan to Jiffy. And all of them have been expense focused, and not including the proper equation in terms of assets, liability. So you have a chart of accounts that is very comprehensive. I believe in under the FinMan system is when they started to include assets, liability. You can now get trial balance and general ledger. So GOJ plan implementation over the years. And so though the implementators experienced constraints for the past 19 years, such as the capacity of entity in terms of accounting system and qualified staff, and the resources available within and outside government to develop that capacity. And so such resource restriction have seen a step-by-step implementation path. And so, as I have said earlier, in the earlier days, the focus was on developing accounting software and training to use that software. That's where they emphasize between 2002 to 2014. In 2014, I have said it, is that the Ministry of Finance through World Bank support implemented the CTMS, focusing on cash management. And the period between 2012 to 2018, consultants were engaged to phase IPSAS cash accounting. They were expecting it to happen by 2014. That have not happened. They have missed those deadlines because, as I've said earlier, the difficulty of implementing it. No rollout happened. We have seen they have developed chart of accounts. Municipal corporation is mandated in 2016, as I said, to do financial statement accrual accounting. We have seen the revised financial administration accounting instruction, the FAA instruction mentioning that IPSAS or accrual accounting, IFRS should be adopted. So the revised standard included it. And so what are the steps to fully comply with IPSAS accrual for GOJ? Full compliance. Full compliance meaning you recognize all assets and liabilities in accordance with the standard. And if there are 31 standards, IPSAS, it is in accordance with IPSAS. All 31 standards, those are recognized as full compliance. However, there can be a phase by phase to reach full compliance. I said earlier, it may take you 3 years. So you start off with what? When you do a gap analysis, you see where you are. The first phase is that you say, okay, I'm going to do cash accounting, IPSAS cash. Then you move to modify cash. And when you go to modify cash, you're now recognizing receivables and payables. So you know a balance sheet item, you recognize your bank account and your payables and receivables. And then you gradually move to modified accrual accounting, where you're now bringing on your assets, your property, plant, and equipment, your advances. You're bringing on some loans onto the books. And then you move from there and go to full-fledged accrual accounting. You are now recognizing all assets, all liabilities, and you are applying, one, the recognition criteria, the basis on which you recognize that asset, the basis on which you measure that asset going forward. Same for the liability. You're recognizing all liability and how you measure it going forward. You are applying the full force of the standard. And then in all of the, throughout the phases, as is required, is that those accounts have to be audited. And so the auditors have to give an opinion. And the opinion that the auditor gives is that whether or not the account was prepared in accordance with the standard. And so if it is a pathway, like a cash, the auditor opinion is that, oh, it's prepared in accordance with cash. It's not in not all material respect, it is fully compliant. Not until everything is recognized and standards is applied, the recognition, the measurement, the disclosure notes are there, the auditors can say the financial statement was prepared in accordance with IPSAS. In closing, my friend, I say, what have been my experience in conducting financial statement? I could not leave the presenting to you, sharing you my experience. Some of the experience I have in government is that assets are expensed instead of capitalized. And you may ask the question, but this is something that is basic. This is something that I learned from high school in correcting error. Hello. They make state in government. I have accounts that I'm doing that it hurt me head every day, or poorly the accountants prepare this financial statement. Sometimes liabilities are not recognized, are recorded. Agencies do not prepare timely accounts to be tabled in the parliament. And why is that so? They do not know how to do it. Accounting staff are clueless in preparing financial statements. Financial statements are not in compliance with IPSAS, and so the work of the auditor is long. Amount of time you have to spend to guide, to hold their hand, and you know the standard when you're doing auditing, it said the auditor must not prepare the accounts and supposed to prepare by management, and it's a conflict of interests and self-review and threats and all of those things. You know it. When you go and prepare, when you go and review these audits, this statement that is so much full of errors. And the client don't know what to do or to correct it because you want to say the statement prepare in accordance with. And GOJ entities prepare cash accounting instead of account. You find that a lot because people are just recording as they get along. People are not trained how to prepare. So in summary, friends, conference, process of implementation over the years have been impacted by one, in terms of government, lack of financial resources available, complexity of the process, the political will of the different administrations, and low compensation. Staff are not compensated. And so government really don't attract the best mind. The persons who are learned accountant, who know how to apply the standards. And staff who they have trained, which the gentleman shared with me, that they train these staff in preparing it, and then lucrative employment come along. Hello, you're getting $200,000 and if your job come for $600,000, sorry, I gone, you know? And so the process stopped or slowed down. And now you have to go at it again, develop new learned skill sets. That's my presentation. I hope that you guys would have learned a lot, and you would, on graduation, those of us who are not in the working world and working in government will come and work in government. There's vast amount of knowledge and experience. And if you want to make a name for yourself, to be a guru in the thing, there's work here so that you can develop your skill set. You can master the skill. You can become implement IPSAS in government, because they're always evolving. The parish council need you could come and join the Auditor General Department to audit financial statements that are preparing accordance with IPSAS. Or you could go to an executive agency that are preparing account in accordance with IPSAS, or government companies who are doing IFRS and such. So thank you very much.